Good afternoon. Time to have a look at market news now. Asian stocks fell, but the moves were smaller than during Friday's global equity sell-off, which wiped out more than $2 trillion in market value. Japan led the declines in Asian equity session after the government shut down borders to visitors. The region's reopening stocks such as restaurants, department stores, train operators and travel shares also suffered some losses. Stocks in Europe rebounded as well, and we also did see that U.S. equity futures rose along with treasury yields as a resemblance of some calm returned to global markets, while investors weighed risks from the Omicron coronavirus strain and re-evaluated their views on monetary stimulus. But what we're going to do right now is just have a look at currency markets to see how they're focusing, because what we did see this morning at least around 6 a.m. is some kind of recovery happening, especially with the rand. And we're going to get the rand on screen for you now to see the plunge that we did see in June earlier this year and going into July. But what you do notice right now, 16.14, at some point we touched around 16.20, which is probably the lowest we've seen if you had to compare it to about say last year. And this is as a result of this knee-jerk reaction. At the point in which it touched 16.20, we were about 5.5% lower against the dollar. Interesting to note, though, that the first half of the year, we did see the rand be one of the best performing currencies, especially when you benchmark it against what's happening in Europe, African region. Second half, erasing all of those gains. And again, it's the story of what happened, on Friday, but it's also the King dollar here posing a bit of a risk. Last week we had Thanksgiving, and generally U.S. stateside Thanksgiving is generally a preparation for the market to prepare for Christmas and the holiday season. But we did see a stronger dollar be the theme for last week, as well as the global theme for markets. However, when we look at the rand, currently 16.14, we're also seeing some recovery on our bond markets, the benchmark 2030, the yield on that particular front appearing closer to a little bit lower as it were compared to last week. But let's bring in another currency here, because oftentimes when we talk about the rand, we also talk about the Russian ruble. And what we did see this morning, that one right now, 74.99. It recovered also after sinking a little bit lower after that Friday news sunk to about a 7-month low. This is probably from the weakest point we saw since April last year. We did see some weakness in October, about a month ago, and this was again the selling pressure on the back of possible military intervention in Ukraine. But the Russian ruble at this point adding against about 1% against the dollar. Let's bring in another currency and look at the Brazilian real. What we did see on Friday, though, Latin American stocks and currencies also being brought into this broader sell-off that we saw on Friday as well. Interesting to note there is that the Brazilian real, that one basically recovered marginally. And at the point where we had that news about the new strain, that currency was about 0.2% lower. So it was the Mexican and the Chilean currencies that led the losses on Friday. This particular currency, the Brazilian real, faring a little bit better than its regional peers. That is about 0.2% lower on Friday. And that is where we're sitting, 560, about a 0.7% better performance if we had to compare it against the dollar. But to talk to us about broader themes that are playing out in the market, especially as we kick in the new year, rather the new week, we are joined by Patrice Rassou, who is a Chief Investment Officer at Ashburton. Patrice, thank you so much for your time. I mean, let's talk about, JSE right now. How are we faring given what we saw Friday? I mean, I mentioned to one of our analysts that's quite a coincidence that Friday was Black Friday, but it was also, I suppose, Black Friday for markets as well.
Correct, Nastasia, and good afternoon to you and to your viewers. Yes, it was Black Friday. It was one of the worst days we've experienced this year. And I think that what really calmed markets is the fact that we have more of a sense that maybe this new variant, this new name that we're all learning, Omicron from the Greek alphabet, seems to be very much playing out along the lines of what we've seen with the Delta variant. And if you recall, markets took the Delta variants in its stride and didn't really get spooked by that. So after quite soothing and pragmatic words from the president on Sunday at the family meeting, and the fact that markets seem to think that this variant might not be worse than previous ones, markets are back on the front foot slightly. So the JSE up 1%, but I think very important to look at the components, the SA Inc component, the mid cap, which are really focused on the SA economy, rebounding by over 2%, and the small caps also doing slightly better than the broader index. So really SA Inc stocks doing well, financials, and some of the hospitality stocks, which were really down strongly between 10, 15, some of them close to 20% are really making a comeback today, Nastasia.
So on that note, then, is there a big risk for the market, given that, I mean, as you mentioned, when we look at the market reaction to the Delta variant, is there a concern at the back of markets, given that there's still some but that we don't know, even though we had one of our, health experts saying that the symptoms are quite mild at this particular point when it comes to Omicron?
Yeah, you're very right. I think the data is very new. It's very untested. We don't know how people are going to react to this new variant. The expectation is that as you said, it's going to be a mild symptoms, and the existing vaccine will be able to deal with it. But we are seeing certain countries, Japan this morning, for instance, who've decided to ban all traveling. So as you mentioned already in your intro, I think the concern is that the world might go back in lockdown mode, and this is just ahead of the Christmas holidays, where there is normally quite a lot of travel back and forth between countries and within countries. So there remains a lingering concern that this new variant and new attitude towards the variant might slow down economic activity. But for now, markets are taking a view that it's more similar to the Delta variant and we'll be able to deal with it, and the reopening mode that we've been in will continue.
Right. So on SENS, we did see Impala Platinum launching a buyout offer for, Royal Bafokeng Platinum, valuing the company at more than 43 billion rand. What has been the market reaction to this announcement?
Yes, RB Platts up 14.5%. Maybe surprisingly to see both Implats up 2.6 and Northam, the rival bidder, up 3.6. While Amplats, which really hasn't been involved in the whole bidding war, up only slightly 1.5%. The market really taking a view that a combination of sorts will be positive. So far, the fact that it's Northam is up slightly more, probably leaning towards the deal going towards Impala, but obviously the big winner will be RB Plus minority shareholders who are already in the pound seats in terms of already having an offer on the table from Implats of 150, and if Northam decides to come back, that offer is likely to be closer to 180. So really nice premium on the share price, which is around 139 rands for RB Platts.
Right. So as well, we got a trading update from Standard Bank indicating that the lending and transactional, activity continuing to gather pace in the 9 months to end October. When this company, this financial, institution does publish their numbers, what will be the key things that you look out for Standard Bank's numbers? Yes,
Standard Bank up 3.7%, actually lagging slightly some of the banking moves we've seen. Very broad brush update talking about a recovery, as you said, in lending activity, seeing card spending back to 2019 levels and very strong trading. Well, the one thing I would look out for is how revenue growth compares to cost growth. Unfortunately for Standard Bank, that still seems to be negative, where they talk about negative jaws. So revenue growth not enough to be able to match cost growth. The credit loss, the amount of provision they're taking away for bad debts, that's improved quite a bit. That's now in line with their longer term average. I think we're going to look for there was a broader improvement in revenue and in especially non-interest revenue, which is a more sustainable measure than trading, which tends to be very volatile as a source of revenue. I think that's the key figure of the key thing to look at. And obviously, we're looking for more information about the Liberty acquisition, which is likely to close at the beginning of next year.
Just quickly, we've got a few seconds left. One key piece of information or news event that you'll be keeping an eye on.
I think a lot of mergers and acquisition activity, Nastasia. I mean, we're talking RB Plus. There's also AVI, which is subject to a bid by Mondelez, the one of the global player in the food manufacturing industry for their Snackworks business. I think what's quite interesting is a lot of foreign investors seem to be looking at our market with a view to acquiring our company. So that gives you a bit of a sense that valuations in South Africa are at quite low levels compared to what we see in the rest of the world. So observing that as for us is quite interesting as market participants, because already we're seeing the Bourse, the JSE shrinking in terms of numbers. So I think that's one we're going to keep an eye on.
All right, Patrice, thank you so much for your time. That is Patrice Rassou, the Chief Investment Officer at Ashburton Investments. And the other key piece of information that we'll be keeping an eye on is Friday's non-farm payrolls reports. Of course, investors will be looking at that Friday number for some kind of future direction, indication of future direction for monetary policy, especially in the US. We're going to take a quick break, and I'll be back with more news for you.